Hi, Jonathan York here from IRG BOP, looking at interest rates and when they're likely to rise here in New Zealand. After the move last week from the Reserve Bank in Australia, we've now got 1.5 percentage point difference between here and Australia. That's quite a large differential, and we're obviously seeing that being reflected in the currency here between the Australian and the New Zealand cross rate, and with that trading down now towards 76 and probably be heading a little bit lower, which should help to stimulate some growth here in New Zealand, as Australia is one of our major trading partners. The major issue is that we've got different stages of the economic cycle here between New Zealand and Australia. Australia is pushing along at near-trend growth around 3.5% per annum. They've got rising employment and they've got a surge in corporate earnings. You compare that with New Zealand, where we've still got rising unemployment. We've got growth that's pretty anemic at best, and we've got companies that, although the recent reporting season has been good, most of those improvements have been by cost cutting rather than actually improvements in revenue. So we are at different stages of the economic cycle, and that is going to take some time for it to sort of filter through into New Zealand. The common perception here in New Zealand is that rates will look to be increased sort of June, July time. That may now be pushed back a little bit further into the third quarter here in New Zealand. The issue that the Reserve Bank faces is that the longer it takes before they start to increase rates, the further potentially they fall behind the 8 ball, and the more aggressive they may have to be in getting rates back to the more sort of what's perceived to be the normal level. That could be as high as 5%. If you bear in mind we're only 2.5 now, that's a doubling in interest rates. So it is a finely tuned balancing act that they have to try and perform, and it'll be very interesting to see how it pans out. Elsewhere, we've still got Greece bubbling away. Most of the talk coming out of the EU bloc now appears to be that a compromise package will be arrived at, and that will obviously be good news for the Eurozone bloc. It should take some of the pressure off the currency as well, and will lead to a more normal trading environment. Elsewhere, growth-wise, we've still got the OMIP Eclipse 2010. Also for dividends, we've got many of the shares now in the New Zealand index are trading at some pretty attractive gross dividend yields. Telecom and Vector, just to quote two, looking at near double-digit gross returns on their dividends. So very attractive for income-generating portfolios, and call us to discuss these further. Disclosure statement available on request. Call 0800 867 323, or go to the website www.irgbop.co.nz. Lots of interesting articles, investment statements, investment ideas, and we look forward to speaking to you soon. Thank you.